I said, because of the time when I thank you so much. Right there about me. Sometimes I just think making that you know what I mean? But I'm like, no, it's gonna work.
Yeah. Oh, yeah, sure. So great. Yeah, right. And then, I have oh, okay. Yeah, so I got something. You want me to?
Did you want to introduce?
No, it's fine. If you guys have it already, we got lunch out here. Looks like everyone's here. But we have George here. George Andersen's going to introduce himself, and then also introduce Jax, and then I'll say something in the middle. But let's get home.
Okay. So actually, I'm glad that Dave came up and grabbed me before he's talked here, because he's actually the reason that I'm here. So I think it's probably about a month ago, last month, he was doing diligence, and then about a few weeks later, Clayton was doing his due diligence as well. They were calling on expired listings, and I have a handful of properties that I purchased, but then I've sold them immediately on a seller finance contract. And so if the seller wants to sell it, they're technically the owner. We can get into that. That's why Jax is here to kind of explain some of the realities of it. But they'll say, hey, we're going to list the home. I go, great, go ahead, knock yourself out, list the home. Well, they've burned through, this client's burned through a few agents. And so they would list it and then they would withdraw or it would expire, whatever. So every time that happens, I always knew when Vicky and Andres had withdrawn their listing because my phone blows up. And so I took the time, I was speaking with Dave, did the same thing. I said, hey, you guys, there's probably one really important question on an expired listing that should be asked, and I've not really heard too many agents ask it. In this market right now, what would be a really good question to ask the seller on why they withdrew their listing or why they let it expire? You got to think a little bit outside of your normal realm of, well, they didn't like the agent or anything else. What would be a good question to ask? You don't have to come up with the answer. I'll help you out. Tell me about the mortgage if you have a mortgage on that house. What kind of terms do you have on the underlying mortgage on that listing that you just withdrew? Most agents would say, why does that matter? We're going to pay it off, right? Okay. How many people out there, and I don't know what the numbers are, but how many of these listings that have been expired withdrawn, how many of those sellers do you think thought that they could get last year's price on the house because that's what their neighbor got? And yet, how many of them have an interest rate on their mortgage that might be 3.5% or less? Have you found out that? Is that one of the questions that you ask? If a seller has a 3.5% mortgage on their house right now, or lower, there's a lot of people that are in the twos. This class, you're going to understand by the end of this, and then this is going to open up to a whole lot of other things. For those sellers, that is actually an additional or second financial asset in addition to the home. That is even more valuable to the seller than if the home was free and clear. Okay, can somebody who's just selling their home right now, could they offer a buyer no closing costs, 5%, 5.5%, 30-year fixed rate loan, 10% down, no mortgage insurance? Is that out there in the market right now? No. Could a seller offer that? if their interest rate's lower than that, they could offer that, okay? And what's the hesitancy that the buyers have right now? Is it the price of the home or is it the payment?
Payment.
Right, so a seller that can offer a lower payment can probably also get a good price that they might have been trying to get. And so that's a great pitch that we've been educating and doing classes and showing people how that works. And so, you know, I'm a lender. People ask, well, why would you be involved with this? Well, you'll understand there's a lot of this stuff that if you do a seller finance contract correctly, all the parties need to know how it affects them. It can affect the buyer, it can affect the seller. Right now, the way that it affects the seller is a big deal. Because the seller says, "Oh, wow, this is great. I listed my home and sold it for $50,000 more than what it was. I got a great seller finance offer. I'm making $1,000 or $1,500 a month in cash flow." And then they go to buy their next house. The underwriter looks at it and says, I can't count the income off of this contract. That happens if it's not done correctly. So that's why we coordinate with Jax on the legal side of things, and we bring in a lender that has experience. I've been in the mortgage business since 1989. And the gray hair is from my daughters, not from the mortgage business. But anyway, Jax is here with me today. He is the president of First Liberty Title. And Jax, I mean, hands down, is probably the premier seller finance real estate attorney in the state of Utah, if for nothing else by the number of transactions that he's done. Anybody here does anybody in this office work with somebody that's a good producer? That's right. Okay, but the number of transactions, does that experience give you some know-how along the way as well? Okay, so Jax has the legal background, but literally thousands of seller finance contracts and how to do it the right way, how to keep yourself out of trouble, how to make sure that the buyer's needs are met, how to make sure that the seller's needs are met. And I've worked with Jax for a couple of decades. We actually put together a CE class, and it was his idea, and I just chipped in like a very small piece of information. But we've been doing it since 2009. Have there been some market shifts since 2009? And the thing that is so cool about seller finance is no matter what market we're in, there is a strategy that works. So anyway, rather than getting too much into that, I want to turn the time over to Jax Pettey. And we're just glad to be here today. I hope you take some notes and try to understand some of the potential here that could be done in seller finance. So let's give a hand for Jax.
I appreciate that. Attorneys do not get applause, I'm not sure. So as George mentioned, this class is on seller financing. And I've been doing this for 25 years. I've never seen a better seller financing market. So the question that I always get asked is, how do agents take advantage of it? And I think agents can take advantage of it now fairly easily, because even though we've taught a number of agents in our CE class, there's still not a lot of people that really understand how to do it and really take advantage of it. And the ones that do, are like the guy that came to the class, and about 4 years later, I asked him how much he made off of what we taught him. He said $2.2 million net. Now that agent was extremely happy. He's a good guy, but I guarantee he's not necessarily like better looking than all of you. So it's just about doing something. And my background, George mentioned, I've done a number of seller financing transactions. I've been practicing law. I actually got to the point where I knew what I was doing, so I prefer most of my legal work out now. But I'm hoping that in our time together, the one thing I know about technology, fairly most when you need it most, is that you guys can get an idea of some of the ways you can use it. Now understand, I've taught week-long seminars and still feel like I've taught about half of what I'd like people to know. So don't feel like you need to understand everything. So that would be number one. Number two, more importantly, don't wait until you feel like you know everything about seller finance to start doing. I always ask this question. Of all the agents in here, how many of you waited until you knew everything about real estate to close your first deal? Okay. Nobody's ever raised their hand. But the other side of that is, when you got into real estate, you just hit it. You just did it. right? That's why you're still here and not doing something else. So let's just understand, we're gonna cover the tip of the iceberg today. And it's gonna feel like drinking from a fire hose, but it's really just to give you an exposure, because I taught this to one Keller Williams team, and they closed 12 deals within a month and a half. Why? Because they had a bunch of buyers that were sitting on the sidelines and sellers that were sitting on the sidelines. And they just talked about some of the things that we discussed. So hopefully that'll happen here as well. So let's talk about some of the benefits to the buyers. These are important for you to know, because I'll just ask you, what's the biggest reason buyers are not like buying homes like they were 2 years ago? Monthly payment, excellent. Which is a derivative of the interest rate and the price, right? My experience has been that buyers are much more interested in the monthly payment than the price. So one of the things that I do is I like to invest in real estate. Do we have anyone else in here that's invested in real estate? Okay. Past 8 months, I bought 12 properties. Every one of them I convinced the sellers to leave their loans on the property, including a 2.5% interest rate that's 4 minutes from downtown Salt Lake, and that's for $3,400 a month. Like, that's, once you understand it, some of the things you do for yourself and your clients. But you can get your clients interest rates that no longer exist. And it might take some looking, right? But if you have a listing, one of the things we teach in the CE class and some of the additional trainings is building a kind of a business model out of it, a system, if you will. And the system is very simple. You use listings to get buyers into your buyer pool, and you use those buyers to get more listings. And if you do any sort of prospect, right, please take notes from the standpoint of how would this make my life easier when I'm prospecting? George mentioned one, right? If you're calling expired listings, instead of convincing them their past agent wasn't good enough, wasn't smart enough, and dug on it, people didn't like them. Anyone catch that reference, by the way?
I did.
Okay. SNL, yes. Maybe talk to them about interest rate, because we've seen a lot of agents use interest rate as a way of getting the sellers the higher price they want. And for whatever reason, if you study human psychology, people get fixated on an item and that's what matters to them, even though logically it doesn't make sense to us, right? And a lot of times for sellers, that is sales price. So you can get a seller a higher sales price, meeting their mental block. You get the buyer the interest rate they want, meeting what they're needing, which is the payment, and you close a lot more deals. There's also no credit qualification with seller financing. Now, I put an asterisk next to that because sometimes the seller will want to pre-qualify the buyer. But I'm just going to be honest with you. 99% of that pre-qualification is how much is the down payment, okay? Now, we're going to go over some ways that you as agents can find buyers. So anytime I have an agent who comes to the class and starts closing a bunch of these, I'll talk to them about what are you doing to be successful? And I'll take those answers and I'll teach other agents, because I don't think it's a limited amount of market share that can be done with seller financing. It can be done at any time and in any market. For example, 2 years ago, would you think seller financing was that popular? No. What if you figured this out, like the agents that we were working with? What if you figured out that most of your clients that purchased a home had significant equity that was debt equity? Debt equity is just equity that's not earning them any money. So through a lender like George, they got a home equity line. Doesn't cost them anything. But then you set up a transaction, and we have agents that find buyers. Like they figured out how to find buyers. So imagine if you were this person, right? Your agent took your debt equity, found a buyer that had 20% to put down, got you an investment loan where you put 20% down off the home equity line. The next day we close on a hybrid transaction to get to your 20% back. How much money do you have left in that transaction? None, right? Investors love cap rates. They're like a 10 cap rate. I think that's garbage. Like, I love infinite returns. I love I've got no money in it and I'm making a bunch of money, okay? So you could do that over and over. Now, take the number of clients you've done in your life. If you got even half of them to do that, That's a lot more commissions for you, right? In fact, I'll tell you one cool story about using that program. I get these phone calls all the time. It'll be, Jax, I've got a situation, you probably don't have a solution. The situation was there had been a divorce. The lady had received $240,000 in the divorce, but she also had 4 kids, no job, no income, no career, right? Can't buy a house. That's not a good situation. So she did that multiple times, made an average of $1,100 off of each one. So now she's making over $6,000 a month. By the way, worst case scenario, she gets a property back that now has more than 20% equity and the agent gets to resell it, right? And that was when everyone thought, oh, seller financing isn't that popular. There is always a way to use it as a tool. So you just have to be part of the group that's figured out how to use it and maximize the value. Right now, the maximization of the value is with buyers figuring out how to get them interest rates and payments that they want, right? And we'll go over how you benefit the sellers as well. But anyone else in here speak Spanish? Okay, that is a huge advantage. George actually, those transactions I was mentioning, George did a number, how many did you guys do? 11, right? How many of those were sold to Latinos? All but 3. All but 3, right? Now, I happen to love that population. I love helping them. I think it's great to not only make money, but help people. So it was really cool to see meet people that went from homeless to homeowner. Because I think those people work really hard and they can earn a lot of money. But I think they deserve a house. Disagree, that's your prerogative, but I guarantee I'll never be president because my philosophy on immigration is if you work hard, you're welcome. If you're still 30 years old playing video games on your parents' couch, we should deport you. Like that's how I think it should work. And you speak Spanish. And I speak Spanish, yes. But there's also no limit to the number of transactions. So if some of you are investors, do any of you work with investors? Okay, so a few, right? Under standard guidelines, you're limited to 10 properties, right? There's no limit on the number of seller financing transactions you can buy. There's no limit on what type of properties you can buy. I help developers. In fact, most developers will use a form of seller financing. But instead of paying everything to the seller up front, they'll get them a payout each time a lot is sold or a property is sold. Most of the commercial I bought has been on seller financing. And the other myth that I would break is you need a lot of money to buy a seller financing property. I just sent this out as a referral to an agent to buy it for themselves. It's a property where the current mortgage is $356,000. The value of the home is $410,000. Agent is putting down $5,000 to buy the house, right? It's doable. It's something that's happening currently. So the other thing we like to do, those of us that do a lot of seller financing, is we like to buy a property and then resell it. So how does that work? Anyone have any ideas? So better than a wholesale. Because a wholesale, you get paid a little money up front, right? If you got paid 20, 30 grand, that's great. But the reason it's better than a wholesale is if I buy a property, like let's say I decided to buy that one and resell it, right? So I buy it, I put $5 grand down. Do you think I'm going to expect $5 grand down from my buyer? No. Now, most of the buyers have about 80 grand down these days, okay? So if I put 5 into it and I get 80, that's much better than a wholesale. But on top of that, I'm getting their interest rate, my seller's interest rate. Do you think that's what I'm selling it at? No. So if I get 3.5% and I resell at 7.5%, unlike a wholesale, I'm getting monthly payments. Every month, check rolls in from the escrow company. And then at the end, I've got more left as well. Now, I'm also going to mark the property up, typically up to 10% above market value. Is that fair? Yes, because I'm providing financing to somebody that can't go to a bank and get financing. You had a question.
Yeah, I'm hoping that we get it to where we can get a little more granular because I'm new to seller financing, so I don't know.
Oh, yeah.
All of this is just kind of bouncing off me a little bit. I want to see. I like to follow and see exactly what a transaction might look like.
Yes, we're gonna go through, in fact, we're gonna go through the different types of seller financing
Okay,
and also some of the risks involved with doing it.
okay.
Because you need to know that. Now, if you haven't come to the 3-hour CE class, like we get to go 3 times as deep into it. We'll go into a lot more regarding legalities, case law and things like that. And it's core, and any of you that know George, you can get in for free. But on these things I'm mentioning, right? If I was you, I'd be taking a note, because maybe the person you're gonna talk to tomorrow has a situation where this could benefit them, and you get that transaction instead of their mom that just got a license. You guys notice that everyone in Utah has a relative that's licensed now? Yeah, one cool thing about this is I've had licensed agents list with another agent that understands seller financing, their own home. Why? Because they got a higher sales price and more money over time. So it's a valuable skill, but like you said, right? It's new, it sounds like maybe a little intimidating. I would say this to you. Usually when I teach a class to a group like this that's actually doing deals and has clients sitting on the sidelines, within the next couple of weeks, I'll do about 10 conference calls, right? Because you guys don't have all the knowledge and background. But I'm happy to share that with your clients so that you can put a deal together. We got asked to do one, I don't know if you know Belladonna, but her brokerage asked us to do one. She had an agent that didn't show up to the class, but said, I've got this property, it's not a lot of equity. A week later, we closed it on seller financing. Instead of bringing money in, the seller walked away with money from the closing. But this is kind of one that I like to use because a lot of people that are investors, right? They've noticed that it's really expensive to hire people to fix things. So I'll buy a property and I'll sell it at the ARV value without putting a dime into it. And in my contract, I'll require the buyers to do all of the repairs. And that's pretty cool because then if they do the repairs in default, I get the property back and it's already repaired. But I get the ARV is just after repaired value because I'm offering the financing with the property. And a lot of times I'm selling to tradesmen where, they do drywall, their brother does electrical, this person does plumbing. They can do it more cheaply than I can, but also it alleviates the headaches of running another project, right? Running another floor. So if you work with investors that their heartburn right now is finding people that actually can do the work, call them and talk to them. If you know an investor, right? Call them and talk to them about that because their agent that they work with might not have a clue on how to do that. But again, if you get asked a question you don't understand, you have a client, you talk to them and they're like, yeah, that's great. I would definitely buy a house if I could get this payment. We'll do a conference call. I'll go through the site you don't know because I'm not going to take the time to find your clients. But I will take the time to help you put a deal together. Now, this is the one that is killing it right now for agents, right? This is kind of the secret sauce that agents that are closing week in, week out are using when it comes to seller financing. It's the take your interest rate with you program, right? So what if you could do that? I'm going to explain how you can take at least the benefit. Why is that important? Why are sellers sitting on the sidelines?
Price how much? 3.5%, 5.7%.
Exactly. Everybody hear that?
Yes.
Yeah. So they currently own a house. You guys are going to be amazed by my mad artistic skills. Right. So they own this house at 3.5%. And this one, let's even be generous. Let's say it's going to be 6.5, right? That's a huge jump in interest rates. I mean, it might, for some of these people that are in the 2s or low 3s, they might be doubling their interest rate. That is a huge reason not to list their properties. Has anyone talked to anyone that's in that situation? Okay. I want you to look up that contact and explain this concept to them, right? They obviously can't take the rate with them. But what if they sold this property at a higher sales price? So let's say 10% more. Higher sales price, and they sell it at 7.5% interest, which is very reasonable when it comes to seller financing, right? I've got corporate credit lines on all of my paid off properties. And they're up in the 9s right now, if I want to use them. So 7.5, that's a good interest rate, especially when market rates are close to 7. We've had a number of instances where the old house is actually paying the entire new house payment. Are you guys good enough agents to sell that to a seller that was sitting on the sidelines with a 3.5% rate? I would think so.
2 houses for the price of 1.
Yeah, essentially. And there is a huge demand for seller financing right now because there are a lot of people that make money but have good accountants, and under the current interest rates, they can't qualify for a house, even though they could pay that house payment all day long. So if the big reason sellers are sitting on the sidelines is because they don't want to leave their old interest rate, what are you gonna do when you leave here to figure out how to find those people? And I know you don't understand all the hows and what you need to put in the contracts and all of those things. But I'm gonna suggest that doesn't matter, right? You find the people. You talk to the people. You call those old sellers. When you call the expired listings, ask them what their interest rate is. And when they say, why does that matter? Explain. It makes all the difference in the world. I've got 3.5% interest rate. So if I can get you that on another house, would that help? You can't do that. Well, let me explain how I can. Or you say, you know what? Let's schedule a call and I'll bring somebody on to explain how that works. Now, George understands this concept probably better than I do, because he's the one that's financing the new home over here. And if you do seller financing the wrong way, they're not gonna get the house, right? Who's heard of an all-inclusive trustee to know? Justin Bouchard, I think, was here. He taught a little bit about that. If you do an all-inclusive trustee to note, which is one of the 3 main forms of seller financing, they're very good options. We'll go through them in a moment. But if you do that transaction and try to do this, it's not going to work, because the lender will make them wait a year before they'll count some of the income. But, and this is kind of 501 level stuff, if you do a hybrid lease option to contract fee, again, I know you think I was speaking Spanish, I wasn't. It works if you structure it correctly. Because the other big thing that stops sellers from selling seller financing is, they're like, oh, I've got to go buy another house, and they can't qualify for 2 house payments. George will explain, if you talk to him, that it's actually very easy. How many of those have you think you've done in the past year?
I have a conversation at least once a week, and then probably at least a couple of them.
Yeah. So if you guys find the sellers, right, now you've got people that can walk you through how to turn that into 2 transactions. And their mom's not gonna know how to do that. Just saying. Sorry, I shouldn't say mom, their dad. The mom probably knows it. The dad's.
Don't worry, we're not
Yeah. If I know one thing, it's that they're right and they know it. So you can actually, see, this was cool, like when all of your listings weren't selling because all of a sudden rates had gone up and the market kind of stalled when it came to sales, all the agents that understood seller financing were still getting those Zillow prices because they could sell the house for more money. The reason is they were selling 2 assets, right? They were selling the financing and it came with the house. Why do you guys think those buy here, pay here car dealerships are like all over the place? It's not because they have the best price car, shockingly. So not the best financing terms either, right? But it's easy for people to get the car. You're making it easy for people to get into the home. You just want to make sure they've got a down payment that covers the risk. Yes.
I feel like I'm kind of hearing you say 2 different things. Like on one hand, you're selling the seller financing idea because you're selling the loan and that buyer can get a low interest rate and then the seller can get the higher price. Like that part of it, I understand.
That's one way to do it.
And then you're also talking about, like, you're pointing to your drawings up there, that you can sell it at a high price at 7.5%, so you're making money off the loan and that. And what I'm thinking is like, if you find somebody who thinks they can afford the high price and the high interest rate on your seller financing, first of all, who is that guy? Second of all, how many of your deals are falling through because buyers can't actually make the payments because there's nobody like looking at whether or not they actually can. So that side of it sounds kind of sharky and gross to me. And then the other side kind of makes sense. So like, how do you sort that out?
So that is a great question, right? So I could go through each one of the deals I've done personally and show you how I bought with all the benefits for the buyer, and I sold with all the benefits for the seller. The simple answer is, there are enough transactions out there that if you search, you can find great interest rates for your buyer, right? And sometimes you don't even have to search. This one that called me, they called out of the blue, and I actually gave that to somebody else because I've got enough hobbies at the moment. But that was no interest rate markup whatsoever, $5,000 down, right? And that's not, oh, that happened a year ago, that happened this week. With the selling it for the higher sales price, there are enough buyers looking for it that you can find those buyers. Now let's talk about what if the buyer doesn't pay, right? Let's talk about it from the buyer and seller perspective. From the seller's perspective, if the seller only got $10,000 down and they did an all-inclusive that requires a 4-month foreclosure on top and then a 2-month eviction, that was probably a really bad deal to put that seller into. Would you agree?
Yeah, and that's what, like, most of this, sorry to interrupt your mind out there, but most of the seller financing deals used to be like on the MLS or something, you call them, they're like, yeah, he wants $150,000 down. And I'm like, cute, well, if my buyers had that, they probably would be interested in something, you know?
True.
So that's usually what I'm seeing is, I have a house that would be selling, some guys in here were like, you should do seller financing. And to me, I'm like, I don't wanna deal with like the downline of that, like, I get it, I can make some money up front, I can make money on the loan, but like, it seems like potentially a lot of hassle.
Yeah. And my like real life experience has been significantly different. Like if I had to choose between doing a seller financing deal and a deal with the lender, I'm taking seller financing all day long. My staff, they love dealing with both. No offense, George, but if they could only do seller financing, they would be more than happy. It's actually a lot less stress and hassle because you're trying to now, and this is one reason I love it, right? I got into the law, I got into real estate because I wanted to figure out how to make deals work. Like, to me, that's exciting. To me, that's fun. And it's not that I don't enjoy squeezing buyers into a box that a bank has set up, right? That's, I guess, could be fun too. But it's not. Yeah, it's not. But when you can like take this buyer who needs a home and this seller who would like to maximize the value of the asset, and you make them both happy, like that's when it gets really cool. I've never seen an 800 credit score cry and hug their realtor at closing saying thank you, but I've seen that multiple times with seller finance, right? And that fulfills something within you. But on the default, you want to make sure your seller's getting enough money down, right? Now we're going listing agent side. And understand, when I talk about listing agent and buyer side, there's different conversations. Because as a buyer's agent, you want to get the best interest rate possible for your client, right? With the least money down, and you want your buyer in the most secure position. As a seller, you want to be in the most secure position. So you're going to have something you're going to have to negotiate between buyer and seller there. You also want to be in a position where if everything goes wrong and that buyer stops making the payments, you win either way. That's what you want for your sellers, right? So yes, there are some people that are like, sure, we'll do seller financing, give us $150,000 down. Probably not a very realistic expectation. Although I'll tell you, I've seen where people will put down hundreds of thousands of dollars. The average down payment we see is 10 to 15%. Okay, so if you get that 15% down, you've got, in my opinion, if you're a good listing agent, you can just tell your sellers, yes, we got a higher sales price, we got a good amount down, but put some of that into your bank account in case they don't make the payment. And in the CE class, we go over what the remedies are and how long they take, what the costs are. So I suggest you come to that class to have a deeper understanding of that. But the reason it sounds like it's two different things is it, are you representing the buyer or are you representing the seller?
I get that now. And the third one is, are you going out on the market, making a bunch of money?
Yes.
Yeah.
Yes.
And that's
Money.
why I'm hearing,
We do make money off
like all these different, I mean, that is what it is, right? Like if you're buying something from somebody telling them it's a great deal, and then you're turning around and selling it to somebody else, that's like its own thing that's like this one method of investing in a way. Like to me, it sounds a little short, honestly. But I'm understanding,
You
like,
can talk to my sellers and they'll tell you I was fair, I was honest, I did everything I said I was going to do.
Right.
I don't know, one that's not happy.
Right, but then if they knew that you were making money on the other side of it.
Oh, I tell them in my contract. I have them initial saying they understand I'm buying this to make a profit. If they have a problem with it, they're not somebody I want to work with. And I'll refer them to somebody else.
That's way smoother than the sketchy wholesalers out there.
You know what's funny about sketchy wholesalers? All of them say the other wholesalers are sketchy. Right. I happen to like wholesaling. I think it is something that is valuable within the market. I like people that buy properties and fix them up. Can you imagine what a real estate would look like if that didn't happen? I'm much more of a market individual, right? But on the other hand, like in the CE class, I will teach you some things as agents you need to know to not get sued and not get put before the board. But more importantly, if you do have that happen, if you follow what I tell you, you will win, right? Because if it's just he said, she said, and the other side's general public and you're a licensed agent, you're gonna lose.
But open doors doing this every day anyway, aren't they?
Yeah, there are people that are out there knocking on the doors and finding deals. And, you know, I think like any type of activity humans do, there's some that give it a very bad name, and then there's some that do it well. So you just, you know, it would be nice if like they came to you guys first and said, I just got this offer. What do you guys think? Because I think you could be a good backstop for a lot of the shadier things that might be going on. But let's get back to seller finance. Okay, any other questions before I do that? Okay, so I happen to love making money off the bank's money. Because all my life, the banks have made money off of my money. But for you guys, you need to understand it's going to break down for the sellers into return, right? So one of the things we go over in the class is a spreadsheet that you plug in seller's mortgage interest rate and payment, and then their new buyer's payment, and also, you know, anything above market they made. And here's the really cool thing about that. A lot of sellers, when you talk to them, or when I talk to them, will be like, I really only want to do this for like 5 years. And here's the question I ask, right? We'll calculate what their actual return is. And a lot of times, those annualized returns are in the 20s. If I sell a property and I've got $50,000 equity left in it with a $500,000 loan at 3.5%, and I sold at 7.5%, I'm making more money than the bank is on the bank's money, right? So I always ask them, what investment do you have that provides better than the 23% annualized return? Because I would love to buy that. And then all of a sudden the sellers go from, you know, I only want to do this for 5 years to I don't want to ever get paid off. And we noticed that this was happening in our office because we would call people and say, your buyer is paying you off. And the sellers would get angry at us. Like, I don't want them to pay it off. In fact, we had one that we almost had to threaten to sue to let them pay it off. So we started ahead of time talking to them. So now instead of balloon payments, which were all the rage in the 90s and early 2000s, we're seeing actual prepayment penalties being put in, especially in this scenario, right? Because if your seller is using part of like the old monthly payment, that $2,000 a month to make part of the new payment, they don't want that to end. And the courts will enforce prepayment penalties. What you as agents don't want to do is put a clause in that says buyer can't sell the property. Courts will not enforce that, right? And then your client will don't want to have that happen. Now, you would ask the question 3 questions ago, what percentage of these do we see fail? The percentage is very low, less than 5%. In fact, if you look at the studies that were done after the Great Recession, the seller finance buyers defaulted much less than conventional buyers proportionally. Why? Because they just put all of their money or a big chunk down into this property, right? They didn't put 3.5% down so they can just walk away. They're going to fight to keep that thing. Now, sometimes it does happen. I had a seller up on Wasatch Boulevard that had a nice house. He sold it 3 times on seller financing and paid it off with the down payments. He called me up, he said, Jax, this property is cursed. I said, because unfortunately for him, the third one paid him off and he didn't get to resell it. But again, if your seller's set up correctly, they should win either way. They should win if the buyer pays them exactly what they contracted for. They should win because they get the property back, along with the equity growth, and they get to resell it. And if you guys help them sell it the first time, you should be able to help them sell it the second time. As we mentioned, the seller can immediately qualify for another home if it's done correctly. When we get to the next slide that goes over the different types, I'll tell you which ones work for that, and which ones don't. And it can also be used if you have a seller that comes to you and they bought a year and a half ago, they may be upside down in the property right now by the time they pay realtor costs, closing costs, and everything else, right? We're having a lot of agents that are finding those situations and turning them into a seller finance deal where instead of bringing money to closing, the sellers are walking away with money. By the way, that gets you more referrals generally. They have to bring money to closing. But also they're getting monthly cash flow and then a little bit more at the end, right? That's a much better situation. You have helped that seller out. Okay, so there are tax benefits as well. I don't have time to go into all of these, right? We're trying to keep it fairly compressed, but so far has this information been worth sitting here for? Excellent. So if you have, this is when we see a lot of tax benefits. If you have somebody, they had a house in St. George and a house in Salt Lake. And the past 6 or 7 years, they've been spending more time in St. George. And then we have a winter like the one we just had, and they decide to sell one of the houses. Which one do you think they sell? Salt Lake, right? It's beyond 5 years, so now they're gonna get hit with capital gains. And if they get that all at once, that's gonna be a really big tax hit. But if they can spread it out to where they only get taxed on what they receive as they receive it, that's much better for them, right? And if you deal with people, your clientele maybe is a little older, that's a way you can get the listing instead of somebody else, because you can help them pay less in taxes by using this as a tool. And also seller financing qualifies for the capital gains exemption. So I told you, I've kind of teased that we're going to get to this. If you've written nothing else down, I would suggest you write down these 3 items. We're going to go over the different types of seller financing that are typically done. Now, I've probably done seller financing 100 different ways, right? Including very complex transactions where we have corporate entities that we transfer percentages of the entities over time. I can almost guarantee none of you are going to need that. So we're going to stick with the basics. I'm going to ask you guys, what types of seller financing are you familiar with? Anyone have heard of it? I mentioned a couple, yes.
Like a transferable kind of loan,
Like an assumption?
an assumption loan.
Okay. So assumptions, if it's a pure assumption, is not seller financing because the bank's participating. However, in the assumptions class I teach, we actually teach agents how to go in and find all these deals that nobody else knows how to do because assumptions are so valuable. Imagine if your buyer did this, right? If you were the agent who got your buyer this. This is the last assumption we closed. The agent negotiated it, so the buyer put down $50,000. The seller still had $40,000 of equity in property. We structured the contract so that once that $40,000 was paid out, the seller would participate in allowing for the assumption. This is so cool for your buyers, right? Because they got into the property without having to qualify for a loan. They paid it, it took them, I think, 3.5 years to pay out the seller's additional equity. When he did, his assumption amount was the exact same amount as the sales price on the settlement statement. Now, the agents had already been paid initially, right? So there weren't additional agent commissions. He did not end up paying 2 to 3% in loan costs between front and back end. So it probably saved him $15,000 right there. 3.5% interest rate with 21 years left to pay on. When do you pay the most interest on a loan? Front end, right? So if you get a loan at 3.5% with only 21 years left to pay on a 30-year amortization that started 9 years ago, how freaking amazing is that? Like not even mom and dad get a loan that's that awesome, right? So I'm glad you brought up assumptions because when you combine the two, you can do some amazing things. Like anytime there's value and you have knowledge other agents don't have, there's a way to get value for your client, but also give you more clients. So hopefully you're thinking about maybe what I just said, right? How cool would that be? Anyone have a listing in here that they know the interest rate on? What is it?
I think it's
Somewhere
somewhere around 3%.
around 3%. Is it an FHA or VA loan?
It's not.
Okay. So if it were, Last class I taught on assumptions a week or two ago. Someone had 2.95% listed. So I said, that's great, you can put it on the MLS and sell it, but what about instead, if you market, give written permission, of course, non-MLS sources as well as putting it on the MLS. Because how many buyers wouldn't love to get a 2.95% interest rate? You could get every buyer off the sideline and into your buyer pool. And then, are you guys okay with this train of thought? Purely seller financing? So then, that's step one, right? It's not that hard to find buyers in this market if you can give them a 2.95% interest rate. Then she's got 10 to 20 buyers, right? But they want to live in different places. Did you know lenders can buy lists of FHA loans with, if not the exact interest rate, a pretty good guess. And then you start farming those houses saying, I've got a buyer for your house. How cool is that? Right? I once had an agent, or actually a lender, that had an agent say, I've got a buyer for your house. They weren't thinking of selling. They talked about it and they're like, well, if they've already got a buyer, they didn't really have a buyer. They were lying, right? But they got them to think, yeah, I guess we'll sell our house. Well, this is a case where you really do have a buyer and you double in that transaction. But hopefully, once you get that one, the listing agreement, use that to get more buyers. Anyway, that's the assumptions class, and there's some agents doing really good field volume with assumptions. But this is the seller financing class. So assumptions is not a form of seller financing. Anyone have another idea? Wraparound. So a wraparound, also known as an all-inclusive trustee. Very easy memory trick is it includes all other loans on the property. Okay, so that's one form. Anyone heard of any others? Contract for deed, excellent. Contract for deed, when we go through it, is going to blow your minds in a good way. Any others that you're familiar with? Starts with L. Ends with lease option. So yes, you have lease options, you have contract for deeds or similar contracts, and you have all inclusive. These are the three you need to at least conceptually have an idea of what they are. A lease option is a lease with an option to purchase. It's kind of across my heart, hope to die, I'll sell you the property for a set price, okay? Lease options are a valuable tool. But the reason I generally don't sell on lease option is, lease options typically we see like less than 5% down, right? And as an agent, 5% is less than 6%, which is what you should get. And so the other thing you need to realize is you're not even due a commission when you close the lease option. You're not due a commission until the buyer completes by exercising the option. Now, lease option is the one we see fail the most by far, because there's not that much money down. But it can be a useful item. When we do the transactions where the seller is going to be selling and then buying another house and needs to use part of the income from this immediately to buy the new house, we'll do a hybrid lease option contract deed. Lease option, so they can use the income immediately. Once they buy the new house, it reverts to the contract for deed, so the buyer has the ownership interest. But now we've touched on it, let's talk about a contract for deed. A contract for deed, the easiest way to think about it is if you've ever bought a car with a bank, right? So let's say I go and get a bank loan from Wells Fargo to buy my car. Who owns the car? Can the bank sell the car? Can the bank drive the car? Can the bank refinance the car with another bank? No, that's me. I own the car. The bank merely holds title. And believe it or not, automobiles stole that type of financing from real property, from houses. This is the oldest form of selling real estate, like all the way back in the English common law. This is how it was done. So the contract for deed transfers ownership, but the lender holds title. Who's the lender? The seller. So if that sounds weird, if you're like, oh my gosh, how can that be? It's older than all of us. Just understand, you've got a situation where you can make the buyer the owner and the seller still holds title. This is incredibly important if you are dealing with an FHA loan. Okay, second thing I'll have you write down if you've written nothing else down. Do not do an FHA or an all-inclusive over an FHA finance loan. here are the possible consequences, and this isn't just guessing. I had my staff call the FHA regional office enough time, they actually let me set up a meeting with, we had the regional president on the phone, the vice regional president, had legal counsel, and some other guy, I don't know who he was, but he talked to him. And I asked them about what's called the prohibited transaction list. Anyone know what that is? So every time you guys are an agent with an FHA, it doesn't matter if you're listing agent, selling agent, they will check your name against the prohibited limited participation list. That means if I'm on that list, my title company can't close it. If you're on that list, FHA will not fund it if you are the agent. If your company's on the list, same thing. So if you do an all-inclusive over FHA financing and FHA catches you, you could be banned for life. That would be bad, right? Even if you're the listing agent, now your seller can't sell to anyone with an FHA loan. Not a good marketing strategy. Your company can be banned for 1 to 5 years. So please, no all-inclusives over FHA loans. Lease options, contract for deed will not be put on that list. In fact, VA actually came out with a circular that said they don't even consider the contract for deed to be a violation of their due on sale clause. That's pretty cool, right? So the contract for deed does need to be drafted by an attorney because there's not a state form for that. The state created their own version, but the problem is your buyer can't refinance that because it's not guidelines. But if your buyer buys on the contract for deed, they can refinance the property even though they're not on title. Does that sound strange to anyone? Maybe before that moment in time you thought that was impossible. They can because they're the owners of the property. They can sell the property even though they're not on title because they legally own it. So we could put like after these, like we put a little box like who's it powerful for, right? A lease option is very strong for the seller. If you don't believe me, think about the house you're living in now, and I can have you out of it in less than 2 months, right? 4 to 6 weeks. Contract for deed is stronger for the buyer. It's a 30-day forfeiture process. And then the all-inclusive is the strongest one for the buyer. That's a 120-day foreclosure. Now, we don't have time to go into foreclosure law and redemption periods and how long those last and all that sort of thing. That's a different class. But just understand, based on what contract you're using, it's going to be strong for one of the parties. And so when we're doing an all-inclusive, we typically see a 20 or 30% down payment. When we're doing a contract for deed, it's typically a 10 to 15% down payment. Just so happens that's what most buyers seem to have. So we close a lot of the contracts for deeds. If you're going to ask me what my favorite is, I don't have a favorite unless I'm the buyer or seller, right? If I'm the buyer, what do you think I want? All inclusive, unless it's an FHA loan. If I'm the seller, I like to sell on a contract for deed. The reason is this. I like as much money as possible to cover my risk, right? I want 10 to 15% down, not 3 to 5% down. And it's essentially the same amount of risk. It's just 27 days longer. You do a 3-day notice on the lease option. You do a 30-day notice on the forfeiture with the contract for deed. All right. Any questions? I want to make sure, I know we're going through a lot of stuff. Has anyone, hopefully there's a hand, anyone had one of those, this is a client I should talk to about this, or this is the way I could market this. Anyone? I see a couple of heads nodding. Excellent. If that's not you, right, think harder because you can take advantage of these tools. The thing I found in 2008, the reason I started passionately teaching agents about these tools is because in 2010, you guys know how many agents that were licensed in 2008 were still licensed? Less than half, right? Less than half. And I hate to say it, but a couple years ago when we were doing our masterminds, we were all lamenting the fact the market had crashed. We couldn't wait for it. We were so excited. And guess what? there's still just as many buyers out there and just as many sellers. I would argue many more, because you've had a decrease in the number of transactions that would like to buy or sell. They just don't know how. So your job, right, not mine, is to figure out how to find those people and just have a conversation with them. I've given you the tools to start that conversation. When they ask you the question where you're like, I have no clue, right? Edify yourselves. Say, you know what? I'll schedule a conference call with the foremost attorney that does seller financing, and he can explain how you would be presented. And there are ways to present the sellers and buyers. Unfortunately for you, the seller financing addendum you have in the MLS is garbage. That's as nice as I can phrase it.
Where would you get one that you think is not garbage? You write it. I know you're an attorney.
No, I faced this problem. I would have clients saying, and so you guys know, I didn't hide the ball from the state. I got asked to go up and talk to the real estate. And I went through 10 bullet points, right? A 7-year-old, a judge would easily understand these. 7 bullet points that they needed to fix. And after each one, they would turn to each other and they'd go, yeah, you gotta fix that. That's really important. Give them credit, they did fix 1 of the 10. They put an addendum number on it for you. So, stupid. There's a huge liability issue with their addendum for agents as well. And in the 3-hour class, I've got time to go over that and how to avoid it. But I was getting phone calls. Can you please write an addendum that fixes everything? And it got to the point where I'm just like, I'm just going to write an addendum. So I studied all the addendum, all the seller financing addendums nationwide. I studied what I use on my own. And I put them together. You guys, it's drafted by an attorney, you can use it. I'll put in my contact information, shoot me an email, you can use it all you want. But I promise when you read it versus the one on the MLS, you're going to be like, how did they miss not putting in things like the term, right? To know a payment, you've got to have, yes, the interest rate and the principal amount, but also, is it a 50-year? Is it a 30-year? They don't even have that on the form. So anyway, I digress. But yes, but it's probably a good digression for you, because otherwise you just use that form and be like, anyone else like learning vicarious lessons? I love learning vicariously. I've paid enough life's tuition already. I don't need more. But if you have a situation where you go and you talk to a seller, an expired listing, right? And they're like, if what you say is true, and I can, in fact, right? And hopefully by the point you have that conversation, you've got a hold of the spreadsheet that you plug in the numbers, it shows them what the rate of return is, how much money you're making, all of that. You know what's really cool about sellers? They're smart and they're greedy. Like you can almost always count on those 2 things, except for maybe the first one, but definitely the second. So when you show them, this is how much you're gonna make if I sell it at the price you want, right? Which, by the way, if we just sell it normally, you're not gonna get that price. Here's how much you're gonna make if we sell it on terms. And you're gonna be shocked at how many of them say. In fact, the agent that co-teaches the 3-hour class, his sellers, he gets 100% of them to put seller financing as an option, which to me is amazing, right? Because I've seen couples, they can't even agree on where to go to dinner. But the fact that he'll get 100% of them to allow that and say, why don't more people do this, is pretty cool. And the thing is, like, it's kind of been weeded out of you guys, which drives me insane. If you go 3 versions back on the seller financing addendum, there were like 6 different options, because the people that wrote that addendum were writing it in the 80s when, if you got rates at like 17%, are you gonna go to your new loan? No, you're gonna do seller financing. So they were trying to help agents to help the buyers and sellers. Now it's like everyone just wants to fit them into that bank box. And I think it's a disservice to you guys as agents, and certainly a disservice to your clients. But on the combination usage, that's gonna be, you go talk to a seller, they're like, yes, I would love to let my old house continue to make me money and pay for a bunch of my new payment, right? If their new payment is $3,500 a month and the old house is paying $2,000 a month, where else are they gonna buy that house for $1,500 a month? And do you think if you help them do that, they're gonna tell their friends about it? I know the guys, right? And we buy a tie for an awesome price, everyone in that room is gonna know about it. Just it's the way we work. But that's when you use the hybrid. I'm not expecting you to understand all the intricacies of doing it right now. And I've taught this class where I take an hour and go through with like very fine-tooth comb detail on this much of it. And the one person in the class that needs that, it's awesome. But for everyone else that's like needing the different parts of the seller financing puzzle, it's better for me to go over like a bigger depth and breadth for you. So I hope you excuse the fact that sometimes you're like, your brain's going, I have no idea what's going on. But maybe you're getting everything and that's awesome. So I told you I would teach you how some agents have just gone from 0 to all of a sudden closing 2 or 3 a month. So we'll go through that. Most of the time you're going to start with buyers, right? Because buyers already know they need seller financing. They already went to a bank and the bank said no. Some of these hopefully you're like, oh my gosh, why didn't I do this before? But the ways that people get buyers successfully, the first one is my favorite, and that is lending partners. So I'll give you some statistics, right? I bank at Chase, not because they have great customer service or great fees or great really anything else. They can send wires out after the Fed cutoff time. I don't know how, I don't care how. Other banks tell me they can't do it, but they do. But that gives me access to the Chase branches. The average Chase branch, out of the 90 people that come in for a loan on a monthly basis, a third of those should be living with mom, right? They've got no credit, no income. They're still on the couch. A third can get a loan. The other third have a down payment, but can't qualify currently for a loan. Maybe something on credit, who knows? Right, George? I know you have a number of calls, like how many seller finance related calls, or actually people that have a down payment but can't get a loan? How many do you see like on a monthly basis? And I realize some are attached to seller.
I mean, several every week.
Several every week, right? Have you guys ever gotten a referral from your lender? Like, if you don't conceptually understand, they're trying to find people to do loans for. And so people are coming in to get pre-qualified, and they may have a down payment and they just can't get a loan. What if they gave that client to you, right? If it was Chase, you might be doing 10 extra deals a month if it's just one branch. So what lenders are marketing you? And I would suggest each time a lender bugs you, you market that. You say, I would love to work with you. Here's how it's going to work. You are going to find people that have a down payment but can't qualify for a loan. I'm going to go get them into a house and then make sure they work with you to refinance that loan. But when you send me one, I'm going to send you one because I'm a good agent and I can do that. Does that sound fair? And these lenders, guess what? They don't like saying no. It's much better for them if they can say, you know what? I can't get you a loan right now. I have an agent that can still get you a house and then we'll work on refinancing. How many refinances of seller finance deals do you do a year? What does a ton look like?
Well, when the rates were low, there were a lot more. Right now, there's a lot of people that have a seller finance rate that's better than current rate.
Yeah.
You know, so that's slowed down a little bit, but yeah, all during COVID, there are all kinds of people that were just, and the other lenders.
More than 10?
Oh, yeah. And the other lenders couldn't figure out how to do it. Yeah, so it's.
All right, so second one, short sales. Those people that are upside down in their equity by the time they pay all the closing costs, we're taking them and turning it into the sellers getting money instead of having to come up with money to close. All right, this is what I talked about, non-MLS ways of marketing, right? If you get a seller to say yes, market the heck out of that to bring buyers to you. If you can bring buyers, you can find the sellers. Especially again, if you speak Spanish, that's golden. Those people, they work hard, they earn a lot of money, and they don't even know they can buy a home. In fact, one of my favorite stories is somebody named Raquel, George knows Raquel. She came to the class and she went out and just talked to all the little Spanish markets and said, I can do this. She didn't understand how to do it. She just said, I can do it. She closed her first one and she went back around and said, I did it. And so now, I mean, I'll let her built for our clients for some years too.
I've got several deals with Raquel.
Yeah, the 2 to 3 a month, and it's, once you start that machine, it just keeps flowing. There are always going to be buyers that for credit or other situations can't buy property. These aren't slouches, right? That's the myth, is these buyers are garbage. These are people that just bought a business but can't use the income for 2 years. These are, anyone know anyone that's self-employed? Okay. How do you like paying taxes? You don't, right? You want a good accountant, so you pay the minimum amount of tax, but that may also mean you don't qualify for a home you could easily afford. Like, most of these buyers are very good quality buyers. They just don't fit the box currently. Building your buyers list is a great way to do it. Now, for the agents that are on your team that aren't here, tell them you know how to do seller financing now and go through their potential clients. And guess what? The agent that I have that does the most of these will not let me teach this at his brokerage. Any ideas why? He gets half the commission for doing nothing other than everyone knows he's the seller finance guy in that office. Like, to me, that's great for him because all he does is call me. Anyone do sphere of influence marketing? Hopefully all of you do. Okay, you do, right? I would suggest, hopefully you've thought of some ways that you could market this to them, right? Are you thinking of selling your house and would like to take your interest rate with you? Call me. I can show you how. Then an asterisk. And the asterisk says, take the benefit of your interest rate with you. Okay? There are ways to get the phone to ring when you have the ability to use seller financing as the marketing message, especially if people haven't heard of it. You had a question.
Yes. Can we do these with item holders?
Yep.
I have a few buyers that they haven't been able to buy just like that.
Are any of them in Clearfield?
Yeah.
Okay.
Yeah, just because of interest rate and with the IT number, it's not.
Yeah, and IT loans are super high interest right now. So we generally can get a better rate than IT loans on the seller financing, and we can generally get the sellers to go 30 years, which is a huge benefit to those buyers. So, in fact, I'll tell you a really cool story. We had a group that the agent would put them in a 2-year contract, even though they couldn't get a loan, right? And you'd think, oh,
Keyboard safe, that's not good.
But it would seem like that's an illogical thing, but what they do, all of these people were tradesmen. They go in, they buy the ugliest house they could on seller financing, they fix it up, they sold it. With the proceeds from that, they bought 2 more, right? This one they lived in, they fixed this one up and sold it, and then they did 2 more. How many has that agent done? A lot. And now they're at a point they can pay cash for a house if they want to. Like, you took somebody that couldn't get a home. We take that for granted. And I don't think these buyers are stupid. If I was in another country and I could never buy a house, I would definitely pay higher interest and higher sales price to do it all day long, right? And what about the people that paid 10% above market value 5 years ago? Exactly, right? So if they just continue to be renters, they would not have that benefit. That's kind of the power for the buyers, and that's something I love about it. We talked about investors, large corporations. I'll tell you one that has, I had somebody come to class, their sister worked for UDOT. UDOT had an issue because they were kicking out people on the West Bench. And the problem was those people that bought homes, when you kind of, I don't want to say make up the Social Security number to get the loan, but it was kind of if you had a pulse, you could get the loan, right? That is no longer the case. So UDOT was paying much higher damages to these people because if I kick you out of your home and you can go buy another house, maybe your home's just worth what the equity is. But if I kick you out of your home and your kids are now going to be living in a home where you have to ask if you can put up a poster, you can't put up a swing set, you can't have a dog because you are a permanent renter now, right? Is the equity in your house really what the house is worth? I would say no, and Utah juries were agreeing with that. So he went and said, hey, I can solve your problem. Now, a lot of corporations in Utah, you've got Google, you've got Adobe, you've got a bunch of big corporations that move people into Utah. And they probably didn't sell their old house, but they still want to buy a house, right? This just happened to be a government entity. It's all right. I would have snuck out soon. I know we're going a little over an hour, but you guys want to keep going?
Yes.
Okay. So he said, Jax, could you be available in case they have any questions? I said, sure. I blacked out from 9 to 10 on my schedule. This is what actually occurred, right? He called me and he said, okay, Jax, go ahead. Like he didn't explain anything, but that's okay. I explained it to them. They decided it was a good idea. And every single one of those people they now gave, instead of to their in-house realtor, they gave to the realtor that I worked with. Any guesses on the smallest down payment check that they had to work with? $74,000, right? And it went up from there. So again, a really cool way to do this, if you want to work with larger corporations, is use it as a way of solving their issue, which is they're bringing high-powered, high-paid people in that still have a house in San Francisco with a huge mortgage that's not selling because nobody wants to live in San Francisco. By the way, if you have great members of San Francisco, don't make the mistake I did and visit right now. Destroyed every good memory.
Yeah.
Business owners, we talked about that, right? Good accountants do not make for easy loans. And then listings, use your listings to generate buyers for yourself, right? Don't think of a listing just as a listing. If you have that listing with the 2.95% interest rate, get those 10 to 20 buyers in your buyer pool that want that interest rate. And then you can take a picture of this, you're welcome to. My second favorite one is 7 referrals, right? Every situation where you're helping somebody with one of these transactions where they couldn't sell for the sales price they wanted, or they were a seller finance buyer and couldn't buy, the statistics say they should have 7 referrals if you search deeply. So we'll start with buyers. You want to have somebody that can fix their credit, so you don't have to if credit's their issue. And a lot of times your listings you'll get from your buyers. Who else does expired listings? Okay, how easy would it be if instead of just trying to talk to them, if you could say, and I have agents that do this, I have 10 buyers that would love to buy your home. One of them has 60 grand down, one of them has $80,000 down. Does that sound like an easier conversation? So for somebody like you, like this is such an amazing tool, right? Even if you only have one buyer with 80 grand down, that's a much easier conversation, right? Same thing with for sale by owners. If you already have buyers, you can find the properties for it. But the ideal is you're building a system where you find the seller, you find the buyer, but you're using both to kind of grow your business. And a lot of times those listings will turn into new buyers. But I will say this, you want to structure it correctly, you want to structure it safely. Make sure if you don't have the expertise currently, you're working with people that do. Because I see these one of two ways. I see them when I do them, or when I review them for my staff, or I see them when somebody else messed them up. When somebody else messes them up, it's not a happy time for everyone, right? So they can be fixed, we can do modifications, but sometimes the fix is you have to go to court if it was done wrong. Nobody wins in court except potentially the attorneys, because they get paid to go there. But if you're doing any transaction, make sure the final closing is going to be successful. Make sure if you're putting the buyers in on a 7-year term, they've got a good shot of qualifying within 7 years for that refinance. There's so much more I would love to teach you guys.
You want to hit on some questions then real quick?
We will. I would put this in your phones because, and if you're really smart, you'll put it in your contacts like I do my contacts, like Jax Seller Finance Pettey, because it may not be today, it may not be next week, but eventually you're going to have somebody, or maybe you're smart and you go out and aggressively market this. You want to be able to know who to call so that you get the contracts right. And if you guys have a listing and you get an offer and you're like, I don't really understand it, I'll go through the contract with you. Or if you're making an offer, and you're like, can you check this? I'll do that for you because I would love to see it done correctly. I don't want to see it done incorrectly. Go ahead.
Thanks, Jax.
You bet.
Who's got some questions for Jax?
I'm sure next. Longer, yeah.
Yeah, so if you see this QR code, we'll actually reach out to you and get it scheduled with Jax to run that. If you don't mind, we'd love to help sponsor that up with Utah Roofs and US Roofs. That's a really good question, Dan. Thanks for asking. Who else?
You guys want just the seller finance or they like the seller finance and assumptions?
Are they both core?
They're both core.
Yeah.
Yeah, I'll do it.
Sweet. Good. We can get those invites out. Who else? So keep in mind, guys, that agents are paid based on the problems that you solve. And there's a lot of individuals out there that are having issues right now being able to put the pieces together. So this is just one of the pieces that you can put in place to help you do more deals. That's why we want to have them come in. We do probably 2 or 3 of these trainings a month at USA Roofs. And USA Roofs is a coaching platform. I'm David Bachman, the Director of Lead Generation. I specialize in helping you generate more leads. And right now we have a problem at our company where we have more leads than we do agents. So if you have interest in coaching with Josh Stern, who's the co-owner with myself on USA Roofs, scan that QR code, and we can set up a business analysis with you and kind of go over the leads that we have. Raise your hand if you're at or above goal this year. Okay, so nobody, right? I've done 20 of these classes this year. So far, nobody's raised their hand. That's scary. Hey, raise your hand if you know an agent that's gone out of business in the past year, right? Almost everybody raised their hand if they know somebody. So that's why, make sure to plug in, scan that QR code. We'll send you out a link with all of our trainings coming up. I have one June 29th here. That's 6 actionable steps on how to convert 90% of your listings. We've done over 600 listing appointments. I'm converting at 90% level right now. So I wanted to share with you on how to help you convert at a higher level. So again, take this flyer with you. Some of the stuff that we supply is on the back on our monthly coaching platform. Doesn't matter what brokerage you're in, what state, doesn't matter. We can give you access to our leads. So make sure to come talk to me if you do have access after questions after this. But anything else you wanted to add?
Was that worth sitting through an hour for?
For sure.
Stuart, anything else you needed to add? No. I got in contact with this guy, cold calling expires, right? That's how we set this up today.
We put George's info up there too on the board.
George, when you write yourself next
George,
to
Vehicle house runs.
Oh, yeah.
There you go. Make sure to grab some sandwiches on your way out, and then if you have any other questions for these guys or myself, we're here to help you out. Thanks, guys. Let's give a hand for Jackson. Good investing in something?
Yeah.